Hello, my friends. Welcome back to this week's market analysis. Alright, I think you'll enjoy today's video because I'm going to be talking about breakouts. So, generally, when you hear traders talk about breakouts, it usually boils down to one of these two things. Number one, right? Simply trade the break when the market, breaks out of the range. Or you wait for the market to break out of the range and then do a retest. So, these are the two most common ways to trade breakout, and there's really nothing wrong with this, right? But in today's video, I'm going to share with you on how to enter the breakout before the breakout, right? Let me repeat that once more, right? How to enter the breakout before the breakout. Okay, so you'll be position yourself in the trade, right, before the breakout occurs. So what this gives you is a very favorable risk to reward. So I'll cover all this and more in today's video. I'll see you there. Okie dokie. So just want to share with you something, right? Is that I'm not sure if you realize, but the videos, or rather the video that you're seeing right now is actually pretty darn clear, right? If you compare this with, say, my videos, say 1-2 months ago, I think you can see the difference that this is, so much clearer. Why is that? It's because it's only recently that I realized that I can actually produce my video in 1080 HD. Right? So all along previously it was all in 720, right, HD. So right now it's only recently, right, I just found out that hey, I can actually do 1080, right? So it is quite interesting to note that I've been doing this for years when this 1080 function is actually available to me. So yeah, this is why it explains, hey, things are looking sharper, looking better. So yep, that's just a quick one to share with you. So anyway, back to this week's market analysis, right? I want to share with you is a setup on Euro Canadian, right? Euro Canadian, right? So this is actually a bullish setup. So let me explain. First thing that I was looking at is that the Euro Canadian, this market went into a range over here. Okay, it went to a range. So needless to say, right, in the range you want to buy low, sell high, right? So you buy low, sell high. So traders over here, right, when it came into this area of resistance, this is where things got interesting, right? Because if price were to come into this area of resistance, right, why is it still hovering so long in this area of resistance? Previously, it just came in and poof, it collapsed lower. Came into this resistance, poof, collapsed lower. This time around, it came to this resistance and it hovered for 6-7 candles, 6-7 days, a week or more. So this is something that is signaling to me that hey, something is not right, right? So by right, it should trade lower pretty quickly. By left, what I'm seeing right now is that the market is actually consolidating near, or rather at the highs of the resistance. So it's telling me that, the sellers, right, are unable to push price higher. There could be two reasons for it. Number one, there is no one willing to sell. Or number two, there are buyers, big buyers, willing to come in and buy at this area. Okay, so what I did was that, using, or rather judging at this chart pattern, right, I went long on the break of this highs over here. Right, break of this highs. Okay, and I have my stop loss of, 1 ATR below this low. It's somewhere here. So this is basically, who am I trying to profit from, right? So this is basically going against traders who trade the reversal back towards the downside. For example, resistance, you got this bearish pin bar, go short, right? Where would you put your stop loss? I'm guessing above this high, or maybe somewhere here, I don't know, right? For some traders who trade without stop loss, as the market trades against them, their pain get worse and worse. So I'm basically going against this group of traders who are short without having a stop loss. Alright, so this is basically the setup that I took on Euro Canadian, a long setup. I won't say it's very late to enter. Rough price has just traded slightly above this highs. You could perhaps queue with a buy limit order around here, possibly to get filled next week. Who knows, right? But this is the setup that I took, and I want to just share them with you. Moving on, right? Let's talk about a pound yen. Based on this chart, if you ask me, right, my so-called prediction is towards the downside. Why do I say that? Because you can see, right, you have lower highs coming into this area of support, right? And the thing about support is that the more times it gets tested, the weaker it becomes. Or rather, should I say, the more times it gets tested within a short period of time, the greater the likelihood it will break down. So you can see that support is tested once, twice, thrice, 4, 5 times. So all this happens, tested so many times, support within a short period of time. So my guess, is possibly, a lower move for the pound yen. Okay? So what you can do is, you can look to trade the breakout towards the downside, right? Maybe if price, trade below this low, you go short, or if price closes below this red line, which is the 138,800 level, if it closes below it, you can go short, depending what is your entry trigger, whether you want to wait for a close or just place a sell stop order, depending, on your preference. A more advanced technique that I'm going to share with you is, how to actually, get short before the breakout, right? Often, traders who trade the breakout, they either, number one, the most two common ways, right, that you're going to hear is this. They are either, number one, going to trade directly the breakout, or number two, they trade the break and retest, right? I'm pretty sure that no one has told you so far, number three, is to enter before the breakout itself. Has anyone, mentioned that or taught you that? I'm pretty sure no one has done that, right? So right now, I'm going to share with you how do you enter the breakout before the breakout. Interesting? Right, let's begin. So let's see, right? You can see right now that this market is, as I've said earlier, right? Somewhat of a descending triangle, lower highs coming into this area of support. Okay, so needless to say, right, it is hard to find an entry trigger on this daily time frame because price is pretty much congested over here. Okay, so what you need to do is to go down into a lower time frame. This time around, the 4-hour time frame would be good, right? And on the 4-hour time frame, observe the structure of this market, right? I identify this area of resistance over here. Right, let's have, what color do you like? Right, pink, blue, black, gray. Let's see, pink. All right, pink. Okay, magenta to be exact. So if you ask me on this 4-hour time frame, what I'm seeing is that this market is pretty much in this range over here. Okay, so since on my daily bias, I'm expecting price to break lower. So what could potentially happen is that if price were to come to this level over here, this it's so bright I can't even see, 140, right, 500, right? If it comes to this level, right, I could get a potential sell signal at this level in anticipation that the market would trade lower and possibly even to break out lower. So can you see that, if I were to sell at this area, I'm basically entering the breakout before the breakout, right? There is no confirm that, the breakout will happen. There is no confirm. There is no, 100% guarantee. But if that happens, right, from a risk to reward standpoint, this shorting at this level is very favorable. Okay, so this is how you enter the breakout before the breakout, right? So I kind of like to say that, kind of rhymes. Breakout before the breakout. Okay. So yeah, that's how you could, enter the breakout before the breakout, right? So that's something that I'm looking for as well, if it happens. So this is for the pound yen. Hopefully that is something that shed some light for you boys and girls. And moving on, the last currency pair. Hold on. Okay, moving on, the last currency pair. Right, this is something that I spoke of last week. Right, I said the dollar against the INR. Right, so I'm thankful that many of you come and correct me, say that INR is actually is the Indian rupee. Right, I believe NG said that the IDR is the Indonesian rupiah. So that was where I got confused. But anyway, right, INR is the Indian rupee. Dollar against the Indian rupee. This is the setup that I mentioned last week, and it's looking pretty sweet right now. Can you see that the flag pattern is very tight, right? In fact, it's still within the range of the large range candle. This is the large range candle, right? And the subsequent candles, the 1, 2, 3, 4, 5, 6, 7, they're all pretty much still contained within this range. All right, no doubt we have a few spike down lower, but pretty much contained within this range. And this is what I like to see, right? Tight consolidation, right? Because the tighter it is, right, there's a greater likelihood of it, continuing lower. Okay, because if you think about this from how about an order flow perspective, right? Traders who are short, right now, right? Possibly some of them took profits that lead to some buying pressure up higher, right? But at this point in time, right, there is no strong buying pressure coming into the market, because if there is, right, this market wouldn't still be hovering at this level, right? If there's strong buying pressure coming in, it would have rallied quickly, maybe even back above this area of support, maybe creating a false breakout, right? But clearly that hasn't happened. So what is telling you that at this point in time there is no strong buying pressure, right? So I'm still looking to short this market. Right, since you can see that you have a tightening of a range over here. So two ways you can do it, right? Number one, right, if price were to break below this low, right, this will be pretty much a valid a setup to go short, right, trading this so-called bearish flag pattern. Number two, we can use again, right, trading the breakout before the breakout, right? How do you do this? Go down to the 4-hour time frame. Again, you can see this over here, right? You have pretty much a area of resistance, right? If price were to come into this area of resistance, you could enter right? If you have an entry trigger to go short over here in expectation that the market would collapse lower, right? So this over here, you're basically entering the breakout before the breakout, all right? So as I've said, right, I kind of enjoy saying that, right? Okay. So yeah, that's all I want to share with you in this week's market analysis. These are basically, I'll say, the few setups I'm looking at for the week. So I hope you found this useful, right? Yeah. You took away something from it, right? Each week I try to produce a video and maybe give you an aha moment, maybe to remind you something that is essential as a maybe a trading principle, or basically to ground the trading foundation into you, right? My hope is that you watch enough and you can move on, and you can don't have to see my face anymore in the future, because you're pretty much independent on your own. That is my goal, right? You don't even need me anymore. So that is my goal, right? To make you independent to the point whereby Rainer, I know what he's going to talk about. All right, let's not waste my time. I'll just trade on my own. Right, that would be an achievement for me, and that would be something that makes me happy. All right. So anyway, right, the end of this week's market analysis. If you have enjoyed this video, hit the subscribe button below and feel free to subscribe and like this video. And if you have any questions, any feedback, just feel free to let me know in the comment section below, and I'll get back to you, right? So with that, I wish you good luck and good trading. Talk to you soon.